Okay, so we want to continue our lesson on earnings per share, which is governed under IAS 33. So earnings per share. So we have IAS 33, earnings per share. Now we've already looked at how to determine our earnings per share when there's a bonus issue, when there's a market issue, and combination of the two, and also the introductory aspects. So in this particular lesson, we want to look at how to determine our basic earnings per share when there is a right issue. So I told you that we'll be taking it step by step. So if you've not watched the videos on how to determine your earnings per share on bonus issue, how to determine your earnings per share on market issue, and when there's a combination of the two in a question, kindly look at that on the channel. You will find the lessons and then you will appreciate this particular one that we are about to do. In this lesson, we want to focus on how to determine our basic earnings per share when there is a right issue, a right issue. Now, what is right issue? When there is a right issue. This issue something, I don't be confused or, confused with it. The focus here is how shares are issued or how shares are floated on the market for capital. So we have bonus issue. We look at that and I explained it earlier on. We have market issue. That one when you are placing it to the general public. This right issue is when we are issuing shares in proportion to the shareholdings of um, in proportion to the existing shareholdings. So here we are issuing shares to only shareholders. Then we call it right issue. If we are issuing shares to the general public, we call it offering. If we are issuing shares to a particular group of people, a particular investors, a particular group of people, a particular investors, then we are looking at placing. So we have offering, placing, and right issue. Bonus issue comes in under right issue. When anytime there's a right issue, there's an issue or there's a situation of bonus issue. So we can split bonus issue different from right issue. That's why we've done that in our previous lessons. Okay. So when there's a right issue, how do we determine our basic earnings per share? Our basic earnings per share. Now remember that the formula is still the same. So the formula is still our profit after tax, all divided by our weighted average number of shares. You know, our weighted average number of shares outstanding during the period. Outstanding during the period. That has to do with the general formula we know. Now, in this particular situation, the focus here is how to determine our weighted average number of shares outstanding during the period. Anytime there is a right issue, the right issue offer the shareholders to buy the right shares, the shares at a price that is lower than the market issue. So the existing price before the shares are issued, the right issues or there is a right issue, the existing shareholders pay something lesser than what the existing value is. What I mean to say is that assuming that we are already capitalized with the shares which is having a fair value of 2 cedis. Please take note. $2, sorry. Please take note. We have nominal values and fair values. Here, always pay attention to the market values, the market values or the fair values, not the nominal value. So that here I said at the market price of $2 per share. So this they are capitalized with maybe 100,000 shares, which was issued at $1. That means this becomes the nominal price. Here we are focusing on the market price or the what's the name? The fair value. Now there's a right issue. Anytime there's a right issue, the existing shares will buy the shares lesser than the existing market price or the existing um, fair value. Existing fair value. So take note of that. Anytime there is a right issue, the shareholders will pay an amount that is lesser than this particular existing share price. Now the focus here is that we want to determine our weighted average number of shares when there is a right issue. The most complication or the difficult aspect under this is how to determine your bonus fraction, because there's a bonus element in the right issue because they are paying something lesser than what they should pay. So that is accounting for the bonus aspect. And we need our bonus fraction. What is our bonus fraction? Anytime there's a right issue or your question contains a right issue, your bonus fraction in this case is going to be your market price. So market price of share, okay, before the right issue. Before right issue, market price before right issue. All divided by theoretical X right price. And this is known as TERP. T-E-R-P. Theoretical X right price. In theory, this is the value of shares after a right issue. That is the meaning. In theory, that's theoretical X right price. In theory, how much a share or the values of a share for an existing or a shareholder after a right issue is this price. So for you to get your bonus fraction, we need to determine this particular theoretical X right price. First, this is our market price before right issue, or the fair values of the existing shares before the right issue. So how do we get this theoretical X right price? I need to use an example. Now let's assume that there is a right issue of one of new shares for every 3 existing shares. There is a right issue of 1 for 3 at $1.5. $1.5. The value of the existing shares is $3. So the value of the existing shares is $3. That is $3 per share. Existing shares. This is for existing shares. But the new shares is costing us $1.5. But the value of the existing shares is $3. How do we determine our theoretical X right price? Now, our theoretical X right price is basically the total value of shares. Total value. The question is total value of shares after a right issue. After a right issue, all divided by total number of shares. So it's different thing. This is value. This is total number of shares after right issue. So total. So we are looking at total. Now look at this. This is 1 for 3. Anytime you see such situations, 1 for 3, this one is always telling us that is the new, and this is telling us that is the existing. Please, I'm doing this because of these prices. So in this case, the 3 will go for the existing, while the 1 will go for the new price. So if it is 2 for 5, the 2 is the new shares. So we are issuing new shares. For every new shares, we are going to offer you 5 of the existing. So this is going to be the existing. The 5 is going to be the existing. So don't get confused. So all your existing values will go with this, and the new price will go with this one. So in this case, it's going to be our 1 multiplied by $1.5, because we said 1 for 3 at $1.5. So this is going to give us $1.5. Then it's going to be the second one, 3 times our $3. This is going to give us $9. Now we sum this up to get 4. You sum this up to get $10.5. Now this is what we called the total value of shares after the right issue. Total value of shares after the right issue is here. Then this 2 is given as 4, giving a total number of shares after a right issue. So our theoretical X right price in this question is going to be 10.5 all divided by 4. So 10.5 divided by 4, and it's given as 2 point. Our theoretical X right price is 2.63 per share. So in theory, this is the value of a share, in fact, of a share after a rights issue. So you can see that this value is lesser than the existing share of 3. So the difference is accounting for as a bonus issue or as a bonus shares. So after getting the theoretical X right price, we can now proceed to get our bonus fraction. Remember the formula for bonus fraction is the market price before the right issue. In this case, the right issue price was 1.5, but before was $3. So our theoretical X right price is going to be 3 divided by 2.6. So this is what we would have used our bonus fraction. Our bonus fraction is going to be 3 divided by 6, 2.63. That is going to be our bonus fraction. And this is how to get your bonus fraction, because that is going to be the significant things to do when there's a right issue, because others, the time fraction will still be the same thing. So when there's a bonus issue, do not forget the procedure. First, you need to get your theoretical X right price by following the simple steps we used, and then after which you have to determine your bonus fraction. So now let's take a practical questions that will help us to augment our understanding. Okay, so let's assume that the profit after tax, our profit after tax in this question is $210,000. Then we are looking at the year 2022. So from 1st of January 2022, we are capitalized with a share. So capitalized with 1 million shares. 1 million shares. And there was 1 for right issue on 1st of let's say there was a market issue first. Okay, let's make the things a bit complicated so that we can understand. So there was a market issue on 1st of 4 2022, and this market issue was 200,000 shares. 200,000 shares. And then there was a right issue on 1st of April. So let's still maintain 1st of August 2022. Okay, so there was a right issue which is 1 for 4 at let's use at $2. Okay, then the existing nominal value and let me say nominal price. Okay, and market price is $1 and $3 respectively. Then on first, we are looking at 1st of November 2022. There was again a market issue of, let's say, 250,000 shares. 250,000 shares. Now the question is, what is our basic earnings per share? What is our basic earnings per share? So let's go through the question again. Our profit after tax is $210,000. Then we were capitalized with 1 million shares from the beginning of the period. And then there was a market issue on 1st of April 2022 of 200,000, and there was a right issue. The right issue is for 1 new shares for 4 of the existing at a price of $2. And then the value of the existing share, the nominal value is 1, and then the market price is 3. I brought this for you to tell you which price we are supposed to use when there is a right issue in terms of nominal price and the market price. And then again, there was a market issue on 1st of November 2022. Now the question is, what is your basic earnings per share? We already know the formula. So here the focus is how to determine our weighted average number of shares, since the profit after tax does not need any adjustment. So how do we get that? Remember that we will need our theoretical X right price, and you have the formula already, the total value of shares divided by the total number of shares after the right issue. How do we do that? So we take because we will need a bonus fraction before we can go to the table. We need a bonus fraction. How do we get the bonus fraction? This is the procedure. Okay, we take the 1 for 4. So 1 goes with the new shares, which is 2. So 1 multiplying 2. Then 4 will multiply the existing shares. Now the existing shares, I always thought that we take the fair value or the market value. So here we have nominal price of 1 and the market price of 3. So we are going for the market price, not the nominal. So here we go for the market price of 3. So if you multiply this by this, we are going to get, why? Because I said that anytime we see the 1 goes for new, and then 4 goes for existing. Okay, so 1 times 2 will give us $3. And then this time this will give us $12. Now if you sum this, you get $15 as against 5 shares. So automatically our theoretical S right price is going to be $15 divided by 5, which will give us $3 per share. $3 per share. Now our bonus fraction in this case is going to be, don't forget, the market price before the right issue, which is what? The market price before the right issue of 3 divided by 3, which is giving us 1. That's going to be, it's quite unfortunate. The questions were formulated from my head. So it's giving us 1. So let's have a fraction. So let me change the existing price to, let's say 3.5, okay? 3.5, so that we can get a fraction here. So here will be 3.5. So 4 times 3.5. That's giving us 14. So if we add this 3 to this, we get, so I think I made a mistake earlier. So actually we are maintaining the 3. I think the issue is coming from me. So this time this is giving us $2. And this time this is giving us 12. So if you add, you get 14, not 15. So it's actually 14 divided by 15. 14 divided by 15. So 14 on 15 divided by 5. So that is 2.8. So this is giving us 2.8 per share. And then so our bonus fraction is going to be the 3, the existing share, divided by 2.8. 2.8. So please take note. I made a mistake with this particular computation. So our bonus fraction is 3 divided by 2.8. Now we can proceed to look for our weighted average number of shares using the table. So let's go. So we have date, then we have shares. So we have our bonus fraction. We have our time fraction. And then we have our weighted average shares over here. Okay. So first we are starting with our shares capitalized with, which is 1st of January 2022. 2022, we were capitalized with 1 million shares. So here our bonus fraction will come. We are going to apply the bonus fraction just as we did for the bonus issue. Okay, the bonus plus the market issue up to the date that there was a right issue. The same approach over here. So our bonus fraction is 3 on 2.5. Then time fraction. When was the next issue? The next issue was on 1st of April. So that's going to be 3 on 12. 3 on 12. So this is for the first one. Then our existing shares is 1 million. Then our new share is 200,000. So if you sum this up, you are going to get 120,000, and you multiply this by still the 3 over 2.8, because this was not the date of the right issue. The right issue was on 1st of August, but what we are looking at is the market issue of 200,000. So again, what between this date and this date, what is there? So April, May, June, July. So this is going to give us 4 on 12. 4 on 12. 4 on 12. Now, this was the right issue. The right issue. How do we get a total number of right issue? Don't forget, it's going to be like the bonus issue. So the existing shares is 120,000. So the right issue, our right issue is going to be 1 divided by 4 times the 120,000. 120,000. So 1 on 4. So 1 divided by 4 times the existing shares of 1,200,000. And that's giving us 300,000. This is 1,200,000. So this is giving us 300,000. 300,000. So times 1,200,000. So if you sum this up, we are getting 1,500,000. Remember that from the date of this issue, the bonus fraction will not come again, but the time fraction will continue. So what was the next issue? It was on 1st of November. So from August, September, October, 3. So this is going to give us 3 on 12. This is for this particular one. Then what is our existing? Existing is 1,500,000. And then our new is 250,000. So this is going to give us 1,750,000. And this is going to be 2 on 12 because it's just November and then December. Okay, so let's check if we are correct. 2 by this will give us 5, by this will give us 9, by this will give us 12. So we are correct. So we can add, now we will multiply this by this to get this one. Okay, so the first one is 1 million. 1 million times a fraction of 2 on 2.8 times a fraction of 3 over 12. And that is given us, we are leaving it in a whole number, okay? So that's given us 267,857. 267,857. Let's go to the next one. That is going to be 120,000. 120,000. 120,000 times 2 on this one, all by 4. This is giving us 428,571 shares. Then the next one is 150,000. 1,500,000 times 3, all by 12. Is giving us 375,000. 375,000. And then the last one is 1,750,000 times 2, all divided by 12. And this is giving us 291,91667. Alright, so we can now add everything together to get our weighted average number of the two. 267,857 plus 428,571 plus 375,000 plus 291,667. So all this is giving us 1,363,095. So our basic earnings per share is going to be the profit after tax of $10,000, all divided by 1,363,095. 363,095 shares. So if you do this correctly, we are going to get a basic earnings per share of 210. We're going to get 15. We are going to get $0.15 per share. So that is going to be our basic earnings per share. This is under a rights issue. So the difference here is that how to get a bonus fraction under a rights issue. So don't forget that to get a basic earnings per share, we go by this approach. First, you need to determine your theoretical X right price, because your bonus fraction, the bonus fraction is always the market price before the right issue, all divided by your theoretical X right price. And I've shown you how to determine the theoretical X right price. So you do that to get your bonus fraction, and then you follow the same approach that we used under the market approach. So under the market issue and then the bonus issue approach, then we use the same thing to determine basic earnings per share. So we will also end our lesson here, and then we will subsequently look at the diluted earnings per share. How to determine diluted earnings per share and what account for diluted earnings per share. Please, if you've not subscribed, kindly subscribe to Ronas Academy, share with others, and also leave your comments. If you want any particular lesson on any particular standard or on topic, you can let us know and we will readily attend to. Right, thank you.